So it's fun to work with people who are really competent and very smart and aligned with, what I think is going to be the biggest trend in financial markets in human history, really. Because look, you don't upgrade to a new monetary system without also upgrading the financial system and building bridges for that upgrade, right? When we think about the massive opportunity that there is, given Bitcoin today is a $2 trillion collateral base, right? It has very little leverage. We recently saw an announcement from JPMorgan that they're going to be lending against Bitcoin as collateral. And so I just think that the opportunity here is massive.
How many chairs are you sitting on right now?
Hello, everyone, and welcome to One Chair. We've got a special episode for you today, as we had our first guest on the show. We were joined by Pierre Rochard, who's one of the most respected voices in the Bitcoin space. Pierre is the founder and CEO of the Bitcoin Bond Company. He also hosts a Bitcoin for Corporations podcast. And recently he joined the board of directors at Strive. Pierre answered some of our questions around the Bitcoin Treasury bear market, the pipe deals, and much more. So let's jump right into it. Here's our interview with Pierre Rochard.
Pierre, it's a real honor to have you on the show.
Yeah, my pleasure. Thank you.
You've got a lot going on, so can you walk us through your different roles and what are you focusing on right now?
Yeah, sure thing. So what I'm focusing on, I think broadly speaking, is Bitcoin education. And that's been the through line for the past decade plus of my involvement in Bitcoin, is just trying to get people to understand the value of Bitcoin. Now, professionally, I've had a very long career. Today, and as of this year, I founded my own company, the Bitcoin Bond Company. This is my second venture. The first one was Lightning Power Users quite a while ago when I was in my Lightning phase. But the Bitcoin Bond Company is really focused on developing fixed income products that are wrappers around Bitcoin, because today there are equity wrappers around Bitcoin. Obviously, Bitcoin itself is a commodity. But there's really large pools of capital that don't have a mandate to invest in equities or commodities. What they invest in is fixed income products. And so that's the goal for the company. And that's what I'm focused on. I've also really, been excited and very, very honored to be asked to serve on the board of directors for Strive. Strive is a publicly traded Bitcoin Treasury company. Also, the operating side of the business is an asset management business. And, it was really founded to recenter kind of the ethos, really, of public companies. There's been this long-standing debate about what the purpose of a public company should be. I've always been very sympathetic to the view of profit maximization for the shareholders. And that is really grounded in my understanding of Austrian economics. When I started learning about Ludwig von Mises and human action, the parts that I found most interesting in that book were about the profit and loss system and about business accounting, essentially. How do business people make decisions? How do you measure whether you've created value or not? I think the best measurement is profit and loss. And so that's why I majored in accounting in college back in 2007. And it's really, so fast forward to today, Strive has been very involved in helping move companies away from what developed as this, they call it the stakeholder model, right? Where actually a corporation is not for profit maximizing. It's for, benefiting the environment, or it's for the employees or something like that. And I understand where they're coming from, because I also believe in the invisible hand, Adam Smith's invisible hand, where by profit maximizing, they actually do good, as long as property rights are correctly defined, right? So I think a profit maximizing corporation actually does well for its employees in a number of different ways. If environmental property rights are well established, they're going to do well for the environment as well. So in any case, Strive really was very successful in kind of changing the environment for corporations through activism using their ETF products. And I think that what happened was the leadership team at Strive had always been very interested in Bitcoin on a personal level, and wanted to, see that the company could actually benefit by joining the Bitcoin standard, by really taking notes from what MSTR did with Michael Saylor, and developing what we could call today digital credit, right? So essentially taking a stack of Bitcoin and being able to issue securities around it. So one, obviously the common stock, but on the leverage side or amplification side of whether it's a convertible bond that Saylor pursued earlier, or perpetual preferreds, which Saylor has emphasized, I think, as being better digital credit products than the convertible notes. And so Strive has plans to issue a perpetual preferred, and to really, harness the energy that is the differential between what is paid on a fixed income product like a perpetual preferred, where, if we look at STRC, for example, I think it's currently at 10.5%. And then the compounded annual growth rate of Bitcoin, which historically, obviously Bitcoin's been very volatile, right? I hardly need to disclose that to the public. It's been discussed ad nauseum. But if you look at it long term, which I really think that's what people should do, is that they should zoom out. It's something I've advocated for a long time. That if you zoom out, that you see that Bitcoin can have a compounded annual growth rate of anywhere between 20 and 50% recently. If you go back in time, it's even higher than that, right? And then it also depends on how many years you include in your sample size of compounding. But in any case, that if you have a dollar-denominated liability, the Bitcoin is going to grow more quickly than that liability, then the equity value of the company just, and this is just, back of the napkin math. And I think true, just generally speaking, that if you're leveraged long and the asset goes up, you outperform the spot asset, right? It's just math. And then I think there's a lot of execution that goes into that, right? So you don't want to get over leveraged given Bitcoin's volatility. You want to be really thoughtful about the kind of leverage you're taking on. Are you going to get liquidated if Bitcoin goes down, right? There's all sorts of really important questions that have to be addressed when you're taking on a business model like this. And getting to know the Strive team and their CEO, Matt Cole, and having conversations with him, it became really clear to me that they really do understand what the opportunity is and what the responsibilities are to execute on that opportunity in a way that is long-term and also with urgency, right? And so that's something you want to balance. Is we know that Bitcoin's growth is going to be long-term, but there's also a bit of a gold rush, right? Where 95% of the Bitcoin have been mined. So, the supply is now far more constrained than even the increases in supply of gold, for example. And so there's also kind of a market cap and Lindy effect I believe, for Bitcoin treasury companies, right? Where the older you are, and obviously the oldest is MSTR. It's funny. There are publicly traded companies that held Bitcoin before MSTR. Fortress did so in 2014. I mean, can you imagine if they had continued and if they had run the same playbook as Saylor since 2014? They would be $1 trillion company potentially, right? It would be quite a lot of compounding. But in any case, seeing that the earlier you get started, the better, because obviously Bitcoin's going to increase in value, and then the other part of it though is that you want to start developing a track record of really being consistent and consistently accumulating Bitcoin, being consistent in kind of how you communicate with shareholders, and developing that trust. Yeah, that's why I decided to accept the offer to join the board of directors. And within that, there's also, I think, a really important role as the chair of the audit committee. And I don't say it's important because I want to like inflate my ego or blow out of proportion my accomplishments, or because this is a role I'm just taking on recently. But it's something that I've studied, and I've studied it both academically when I was getting my master's in accounting, of studying Sarbanes-Oxley, studying corporate governance, and what the different roles and responsibilities are around that. And the audit chair is really, I think, it's important in terms of risk management, but it's really important in terms of providing oversight for the company. So I wrote a paper in college on what happened at Lehman Brothers. And people point to, obviously the real estate market crashed, and that was bad. But there also, I think, was lapses in the accounting there. And so when you look at a Bitcoin treasury company, the accounting ought to be pretty straightforward. And that's part of what I'm excited about as audit chair, is that the asset side of the balance sheet, it's pretty transparent about what is material for the company. But you have to be able to communicate with auditors. You have to be able to communicate with lawyers, and to be able to explain kind of what the risks are around custody. Because ultimately, I think that it's really important for treasury companies to secure the asset, right? If you fumble the bag, not only is it bad for the company, but it's also terrible for Bitcoin. We already have too many stories of people losing their Bitcoin, and that kind of tarnishes the reputation of Bitcoin as this store of value that you hold long term. It's a huge responsibility, and one that I'm really excited to be working with the team at Strive on, because frankly, they are very competent on an individual basis. I've met everyone on the Bitcoin team, but I've met a lot of people working at Strive, and they've built a really good culture there. So it's fun to work with people who are really competent and very smart, and aligned with what I think is going to be the biggest trend in financial markets in human history, really. Because look, you don't upgrade to a new monetary system without also upgrading the financial system and building bridges for that upgrade, right? People use the metaphor of like Fiat is the Titanic and it's going to sink. And I don't really like that metaphor, because people go into life rafts. They downgrade in going from the Titanic to a life raft due to a disaster, right? I think that would be a really negative outcome. What I prefer is like Bitcoin is a beautiful cruise ship, and Fiat is a life raft, right? And so people are definitely upgrading, but we have to develop the tools and the pathways for them to be able to upgrade in a way that is not destroying their lives, right? If Fiat went to zero and Bitcoin went to infinity, there would be like lots of people on X who are excited about the outcome. But if you look at the humanity as a whole, I think it would be a terrible outcome. Just the levels of inequality would be awful. It's really important for the asset to get distributed to a wide holder base. Both, it's just adoption, right? That's how you actually get the Bitcoin price to go up. It's not by having Fiat crash, it's by having new adoption. So yeah, that's a long-winded answer, but hopefully that helps explain why I think it's so important to have Bitcoin treasury companies, and why I want to be involved, not in an operational role in the sense that like I'm excited about what I'm doing with the Bitcoin bond company, but in a advisory and oversight role where, look, at the end of the day, Matt and his team, they are very principled and honest individuals. I don't think they need all that much oversight, and they're brilliant. So I don't need, I don't think they need a whole lot of advice, but it's at the edges, right? Where ultimately it would be very difficult for me to be on the board of directors for a company that is anti-Bitcoin, right? And people might say, hey, that's where you'll have the most impact, right? No, I think that's where you'll bang your head against the wall and be frustrated. You want to work with a company that is very excited about Bitcoin.
So exactly, you mentioned the team at Strive, the management, the board. There's a lot of sharp minds in there. How are those discussions behind the scenes? So can you elaborate a little bit more how those discussions go at that level?
Yeah, it's funny. I think that there's an assumed common knowledge base between all the individuals involved, right? And that makes it a lot easier to like communicate at the cutting edge of something new. Jokingly, but it's also true. We listen to the same podcasts. We listen to each other on podcasts. So we already know where our heads are at when we get on a call or meet in person. And yeah, I think that commonality, it's something I've never experienced before in the professional world, right? It's kind of very unusual. So, I can't get into details of, what it's like, in terms of the substance of the conversations, but it's also helpful that we think about the same metrics, the same numbers. We all understand what a balance sheet is, right? And so that I think is really positive. I don't know if you wanted a better answer than that. I wish I could.
No, that's great. I mean, we also look at we follow the podcast, so it's great to know that what they're talking about and what they're saying transparently to everyone is also what's happening behind the scenes. And I mean, at the end of the day, that's great to hear that we see that they understand the strategy and that they're following through with that, right?
Yeah, I mean, I think that bears repeating. The people you listen to on the podcast are the same in behind closed doors. It's not like, you close the door and we start talking about Ethereum.
I really liked your point that you made about why Bitcoin Treasury companies are good for the world, and this is something we've talked about on this podcast before. Is really bringing it to the masses, to people that don't necessarily understand Bitcoin or want Bitcoin, but they will get access to it through the passive investment funds with those companies starting to get into the Nasdaq 100, the S&P 500. So yeah, it's super important point there.
Yeah, and there's some reflexivity there in the sense that there was a Bloomberg article earlier this week highlighting that some not S&P 500 or Nasdaq, but abroad there was an index that chose to exclude Bitcoin Treasury companies because their explanation was that they don't, they hold too much Bitcoin, right? So basically saying that it's not a real quote unquote company, right? Because it's not, what they're used to traditionally thinking about. And I see where they're coming from, right? It's kind of it's always been a critique of Bitcoin that it doesn't have cash flow, right? It's not a good investment because it doesn't have cash flow. And that's kind of the Warren Buffett type take on Bitcoin. But I actually think that is a very, very narrow understanding of value investing. I'm a student of Benjamin Graham and Seth Klarman as well, Margin of Safety, and I've always enjoyed reading books about value investing. And one of the tenets is that if you don't have a great investment opportunity in front of you, it's not a good environment because everything's overvalued, then you want to be able to hold cash, right? And that is actually very challenging on a fiat standard because dollars and fiat currencies are a melting ice cube, right? They're losing purchasing power. And so if you have your balance sheet full of cash because you're waiting for the right investment opportunity, then you have a lot of drag, right? They'll say like cash is trash. Cash drag is a term in the investment world. But with Bitcoin, it actually your long term cash is what I would call Bitcoin, right? That is increasing in value, and so if all of the other assets out there are overvalued, so real estate, factories, right, data centers, all these things, if you deem them to be overvalued, you can hold Bitcoin instead and wait for them to be undervalued, right? That's the whole idea behind value investing, is that you are waiting for the right opportunity so that you have better returns than just buying anything anytime, But even outside of value investing, if you look at, for example, real estate investing, ideally you would wait until the correct property is on the market for you to buy it. Right? Location is kind of what real estate people talk about. And if you just go buy any property just because, your cash is losing value, so you got to put it to work, so you're just going to randomly buy a property, it doesn't matter where it is, then you're just undermining the value of your capital, right? You're eroding your capital, and you would have much better returns if you were able to hold Bitcoin and then wait for the perfect location to come on the market that you want to develop as a real estate developer. So, when regulators look at Bitcoin treasury companies and they say, oh, these companies hold too much Bitcoin, what they should be thinking about is, why do they hold so much Bitcoin, right? Well, if it's because everything else is overvalued on a relative basis, it really is, I think, a problem if regulators want to try to stop companies from holding so much Bitcoin on their balance sheet. Because really what the regulator is doing at that point is destroying capital. Because they're forcing that company or those investors to go into worse investments. And ultimately, that's not a good look for a regulator, right? Don't destroy capital. It's also, I think, from a strategic perspective of national interest, that you would want your country to be prosperous, right? So if you are pushing all of this activity to other jurisdictions and saying, no, here we don't want to become wealthy off of Bitcoin, we want to become poor by making bad investments, well, that's not a very good, outcome for the citizens. And so I think then it becomes an electoral issue, right? That through the democratic process, we would vote for the people who want to improve our standard of living and to, have laws that don't destroy capital. And so I think that's actually what it ended up happening here in the United States with the election of Trump. But it needs to happen globally, that, regulators around the world need to deregulate or better regulate around Bitcoin, so that companies are not discouraged from holding Bitcoin on their balance sheet. Rather, they should be not necessarily encouraged to do so, because that's also a problem, right? We'll overshoot in the other direction. But there needs to be more financial literacy, for example. The concepts I just described about value investing, those are not taught in school. That's crazy to me that that's not taught in school. And that every student coming out of the school system should understand what the stock market is and what stock prices are, right? It's pretty important. And I think the reason why it's not really taught in school is that there's unfortunately a century ago, there was all these public schools that were created that kind of crowded out private schools. And so these public schools, and it's really a kind of a misnomer of public. It's all schools, or almost all schools, are public in the sense that the public attends them, right? And they're well known. But these government-run schools, I think that they have misaligned incentives. And when I was in school in France, for example, I found that a lot of the teachers actually had a Marxist ideology that they were promoting in the classroom. And so, of course, they're not going to teach about the stock market, objectively. Instead, they're going to teach about how the working class is oppressed by capitalists. It's so. Um, in any case, yeah, I'm going on a bit of a tangent there, and let's bring it back.
Yeah, you mentioned this foreign index where an active decision was made by regulators to exclude companies that hold too much Bitcoin. Do you see a risk of this happening in the US? We've seen that with the S&P 500 inclusion of strategy, the first time that they were eligible now in September, they were rejected. Now we see that this is not uncommon for the first time. Tesla wasn't included, Airbnb. There's a lot of big companies that didn't make it on the first try, but now in the next quarters, if they continue to qualify, we should be seeing them being included? Or do you think it's a big risk in the US as well to have them actively excluded because of their Bitcoin strategy?
Yeah, so as far as we know, with regards to MSTR and S&P, it was not a decision that was made based on their Bitcoin Treasury strategy, right? And so I think that we should give the benefit of the doubt that this is about, well, here's how I would steelman it for them. That Bitcoin is volatile, right? And, Saylor's not been shy about sharing that with the public. And that if you're constructing an index, you don't necessarily want a company to be falling out of the index and going back in the index, toggling back and forth. And so you kind of want to wait and see that it is stable enough to stay in the index or big enough to stay in the index, right? Or you could say, well, even if it goes down 80%, it'll still qualify for the index, right? So I think it's really important because there's so many ETFs and other products that are tracking the index that if you had a company toggling in and out, that would cause a lot of friction, right? A lot of trading costs and overhead. So I think it makes sense on that level. But what we have to keep in mind, and I spent the past 3 years in the Bitcoin mining industry at Riot Platforms, where under the Biden administration, there was a whole of government attack, not just on Bitcoin mining, but also on Bitcoin more broadly, and on crypto as a whole. And we had very unfriendly regulators. We had very unfriendly legislators, and it was not a good situation. What the Bitcoin mining industry did, and I'm really, I was a part of this, but it was a team effort, and there was a lot of hard work involved from a lot of individuals to stand up a public policy initiative that would develop credibility with policymakers to help educate them about what's going on with Bitcoin and Bitcoin mining. Because ultimately, legislators and other policymakers, I think that there's the libertarian caricature of them of, oh, it's the state and they're going to ban everything that the state does not like. And so they're going to ban Bitcoin and Bitcoin mining. So I understand where they're coming from on that. But I actually think that it's far more nuanced than that. One, we live in a democracy, right? So ultimately, for better or for worse, the voters do have a big voice in what the priorities are for policymakers and what direction they're going in. And so when you put yourself in the seat of a legislator, like whether it's a state level or at the federal level here in the United States, I think they have three priorities, right? One is, what do voters want? Because they need to get reelected in 2 years or 4 years or whatever it is. And two, what do the campaign donors want? And maybe this is unique to the United States, but there's a lot of money that is involved in elections here in the U.S. And if you look at the academic research, it's interesting. There's people who, cynically, they think that money can buy an election, right? Or that if you donate to a politician, they'll just agree with whatever you're saying. But that's not how it works. So it's actually the reverse. So usually what happens is that a politician says something that you like, and then you donate to them. And that you know that a politician is going to win an election, and so you donate to them because you know they're going to win. People don't want to waste their money, right? So if you think that the politician might lose the election, you might actually donate less. And so if you look at the academic literature, there's really no pattern of the more you spend on a campaign, the more likely they are to win. It's actually the reverse. The more likely they are to win, the more likely they're going to raise lots of money. And there's actually lots of campaigns where you can point to that raised more money, but lost the election. And Kamala Harris, for example, lit a bunch of money on fire and lost the election, right? And so it's far more nuanced than people assume. And then the third priority, so votes, money, and the third priority for politicians, which actually in practice I think might actually be number one in their heads, is whether it's good policy or not, right? And so they do want to know the facts, and they want to politicians don't want to destroy their own credibility in any context, right? So when politicians come out and say something stupid, people make fun of them, right? There's social media, right? There's clips that float around and they ridicule these politicians for saying something just, completely wrong. They get ratioed, they get fact checked, they get community noted. And so what I found with Bitcoin mining was that we could actually get our foot in the door, usually with a lobbyist, right? That helps, that already has a relationship with that politician. And so in the political system, the lobbyists quite often are the gatekeepers, right? Where you first have to persuade a lobbyist that your cause will not destroy that lobbyist's credibility, right? And so if it is just a Ponzi scheme, the lobbyist is not going to go lobby for you because that would be bad for the rest of their clients. They'd lose access to politicians. People don't talk about kind of, the nuances there. And then you want to have excellent data and facts, right? And so that was really my main role at Riot, was developing kind of the intellectual firepower that was credible, that was data driven, to be able to persuade the middle, right? And so you're never going to persuade the extremes. They either already extremely agree with you or disagree with you, and they're entrenched. Forget about it. What you want is the middle. And so the middle is, I would argue, the extremes will be 25% against, 25% for. The middle is 50% undecided. And they want you to come to their office and present your side of the argument. And they're going to ask you lots of questions. And then they're going to kind of make up their mind. And that's going to happen in 3 minutes. Why does that happen in 3 minutes? Because that politician has lots of other issues on their plate, right? Bitcoin mining is not the most important issue facing most politicians, right? Most politicians are thinking about healthcare or inflation or, the military, lots of other more important questions on their plate. And so you've got a very short amount of time. And that's where it really is helpful to have somebody who can write a tweet, right? So because you need to be able to communicate in like 2 sentences. It's not like an hour-long podcast where you can just constantly elaborate on every point, which I enjoy doing. So in any case, that's where ultimately we won, right? We persuaded the middle because the facts were on our side, and we fought them in court. So we did have to sue the Biden administration in federal court, which I enjoyed doing, but it's not necessarily something that you should seek out. They found us. They found out. And so that's where we have to have the same approach with Bitcoin Treasury companies. We have to have the facts on our side. And I think they are on our side, right? And we have to provide education, and we have to go lobby, and we have to be active in public policy so that there's a famous saying, if you're not at the table, you're on the menu, meaning that we're up against some forces that might not be excited about Bitcoin Treasury companies. They might see it as competition, right? So if we're issuing digital credit and we're offering, better returns on a risk-adjusted basis than other industries, then other industries will come after the Bitcoin treasuries on the political level, right? And we have to be clear-eyed about that and not take it personally, right? It's just, hey, it is what it is. And we have to invest accordingly to minimize regulatory risk and also to make sure that, the best thing happens for humanity.
I want to shift gears a little bit. So we've seen now that we're in a Bitcoin treasury kind of bear market. And in this podcast, we've forecasted, or we thought that there would be some consolidation when the bear market comes.
Yeah.
And you guys at Strive already pulled the trigger, so it came way faster than what we anticipated. And so first of all, what are your thoughts regarding the Bitcoin treasury bear market? And second of all, what's going on with the Strive Semler Scientific merger? What can you share about that?
Yeah, so I can't really get into the merger because it's still in play, right? It's an active merger that's was announced. I'd suggest people go check out the announcement and kind of read through the thought process there and the economics. And I think that this is something that also I feel very strongly about as an accountant, is that so we spent a lot of time criticizing the SEC over the past however many years because of they wouldn't approve the Bitcoin ETF. And I do think that was the long overdue that they do that. But I actually think that we should applaud the SEC and be grateful for it in a different direction, which is the level of transparency that investors have for publicly traded companies. And that essentially, due to the laws that were passed after the Great Depression, which frankly, I think the Great Depression was not caused by equity markets. I think it was caused by the Federal Reserve, but that's a different question. They kept the Federal Reserve. But they passed all these laws that increase transparency and disclosure requirements for publicly traded companies. And so now with ChatGPT and AI and LLMs, you can actually tell the AI, hey, go look up the latest SEC filings for this company, any company, and ask it for a summary, or you could even push it to say, hey, give me your valuation, right, of the company, and you can ask it all sorts of things to try to figure out, to do your research, really. And that's what I think every reasonable investor should do. What I think they should not do is basically make an investment decision on a tweet, right, or on a podcast episode, right? Like I don't think that that's the right way to go about it. I think that really what they should do is go download the financial statements, open up a spreadsheet, and actually run the numbers. And there's lots of books that explain how to do this. I took courses in college on how to do it, and, equity valuation, because ultimately, look, the company and the board, like, we're not your financial advisors, right? If you want a financial advisor, you should go hire one. And all of this information, it's already public, so there's not really like even if I said something, all I would be doing is repeating what's already publicly disclosed. And so I just want to highlight that. Second is on the industry as a whole. You're right that valuations, if we look at it from a multiples perspective, have compressed, right? So for example, MNAVs, right? MNAVs have compressed, whether it's MSTR or Metaplanet or any of the newer Bitcoin treasury companies. And that is, I think, reflective of probably three different things. One is Bitcoin price. Bitcoin price had a great run. We went from, I think the low was $17,000 3 years ago or so. And so, we've hit like a 600%, bull market rip over the past 3 years, which I think is great performance. But apparently, there's some people who are disappointed and wanted a greater percentage. And maybe they'll get it. Maybe they'll get a greater percentage. But over, the market has taken a breather at around $100,000, and there's some theories out there as to why. One would be that it's kind of a psychological number where you have OG hodlers who have been accumulating Bitcoin since it was trading at 10 cents, $1, $10, $1,000, $10,000. And so, they've had a pretty good, multiple a return. And when they look at Bitcoin at $100,000, they want to rebalance. They've made life-changing money. They're going to make life-changing moves. And so I think that has brought on a lot of supply onto the market for Bitcoin. And so I think that it's taking a breather here. But I don't think that anything has fundamentally changed with Bitcoin. So if the fundamentals are the same as they've been for the past 16 years, then I actually think that Bitcoin's going to continue to perform pretty well going forward. Now, it's also going to continue to be volatile, right? And so that has to be factored in. When Bitcoin's going sideways, I think that if we've modeled Bitcoin treasury companies as essentially leverage long vehicles for Bitcoin, then we should absolutely expect their trading price to underperform Bitcoin if Bitcoin is going down or sideways. At a 0% return, at a 0% CAGR and 10% cost of capital, a Bitcoin treasury company is going to lose value, right? But if you're looking at it from a value investing perspective, and you're saying, okay, well, the market right now is assuming that Bitcoin's not going to grow going forward, then that seems like a mispricing if your valuation model is that Bitcoin is going to increase in value going forward, right? And so the second big factor, I believe, is HPC and AI and NVIDIA, that a lot of tech investors who would otherwise be very sympathetic to Bitcoin are kind of trying to ride the fastest horse in the short term. And that, they're swing traders, right? They're not, I would argue they're not really investors, right? They're just traders. They're just trying to get the fastest moving thing. And, obviously AI and HPC are going to create a massive amount of value. Is that value going to accrue to the common stock of these AI HPC companies like NVIDIA? So far, a lot of it has, but I think there's a lot of question marks going forward, right? Is they get competitors that's going to drive down margins. And especially, you could argue that, yes, AI is going to create lots of value for these companies, but at what price are you buying that value, right? So you might be overpaying for it if NVIDIA is like $1 trillion market cap or whatever, and it long term it ends up being a $900 billion market cap. Still a huge company, still doing lots of great things, but you overpaid for it, right? And you want to watch out in public markets. You don't want to overpay for the value, even if it's exciting. So the third factor, I think, on the opposite end of the spectrum is gold. Right? Gold has had a tremendous run this year, and so you've got the tech traders who are out of Bitcoin and AI HPC, and then you have the older traders maybe who are out of Bitcoin and gold. In any case, why is gold going up? I think it's just because central banks have been buying gold for the past several years. Should you follow central banks? I don't know. I generally am skeptical that central banks make great long-term decisions. I think that they're buying gold because they are concerned about the money printing in dollars, right? So that's kind of the, but also just they're not as familiar with Bitcoin, right? And I think that if central banks really understood Bitcoin, then they would be accumulating Bitcoin. They wouldn't be accumulating gold. but they're more backwards looking than forwards looking, frankly. And hopefully that changes. I want everyone to adopt Bitcoin, including central banks. That's maybe a controversial statement, but that's so. Then going forward, if the U.S. is going to lower interest rates and it seems like the economy is going to do really well. Where is all this money going to go? I think ultimately it's going to go into Bitcoin. And that if you look at the fundamentals of, look, Bitcoin's, it's better than gold, right? You can send it to the other side of the world. You can teleport it. It's scarcer than gold. And it's scarcer than H100s or whatever AI chips people are using, right? And so even if it feels like there's kind of an air pocket here in the markets, look, there will continue to be volatility. There will be times where the industry for Bitcoin treasury companies is contracting. There will be times where it's growing, and that ultimately it's kind of noise if you're looking at it long term and you're really thinking about it in terms of what the long term Bitcoin potential is. So yeah, I think that there's also a contrarian streak in me, in terms of the value investing of, like, if everybody's dunking on it on social media, maybe it's time to kind of dig in and figure out whether you should be accumulating a position or not.
Yeah, that was a great explanation. I think we were, at least the two of us, were surprised the magnitude of the decrease in the value of those Bitcoin treasury companies, given that Bitcoin stayed relatively flat. But I think you explained very well why that is the case now. I just want to go back to something super interesting you said in your previous answer on Bitcoin treasury companies having to be at the table and working with governments and. Looking at the perpetual preferreds that are being issued now, strategy at the forefront, but Strive also announced issuing perpetual preferreds maybe still this year. And thinking of the success of those instruments, and instead of today, what is it, between 20 and 50 million a week being issued, if we think about scaling this to billions a week or tens or hundreds of billions, those instruments can become dangerous or competitors to government bonds at a certain point. What do you think? How do you think governments in general will react to that, or how do you see the convergence of that?
Yeah. So first, the good news is that these are really, I would argue, not competing with government bonds today, because. Or even in the foreseeable future, because if STRC is at 10%, that is really competing with a different part of the credit market and the fixed income market, which is, I would argue, much lower quality, right? And so if you're looking at like AAA prime borrowers in the corporate bond market, they're probably paying like 5% cost of debt. And it's based on the fact that they're going to have money in the future. But my point being that if you look at who is buying the preferreds, I don't think it's the same people who are buying government bonds. I think it's a completely different investor base. Quite often, government bonds are actually required by regulatory capital, for example, for banks. And I think that the reason why they have to be required is because they're just not very attractive products. And so basically it's a form of capital controls, and it's, forcing people to buy it because, they wouldn't do it voluntarily. And it also is actually, government bonds, people say, oh, it's risk-free. It's not really risk-free. If you look at what happened to Silicon Valley Bank, they were holding government bonds. And when interest rates went up, the value of those bonds decreased. And so it's not like government bonds are risk free in the sense that, like, if interest rates go up, yeah, and if you buy the bond at 1% and interest rates go up to 5%, you're sitting on a very large mark to market loss. And you can realize that loss, you can hold it to maturity, whatever you want to do, but it's a loss. Take the L. And so I think that it's going to be a long time before it's the same investors. But I also think that what governments should do is improve the attractiveness of government bonds. And Andrew Huns from New Market Capital put together a really great proposal explaining how they can do exactly that. That they can actually include a Bitcoin upside component to the bond so that bondholders don't flee, government bonds to perpetual preferreds, and instead, government bonds actually compete. And the other thing that governments need to do, I think, and this is really maybe very political, but I think it's kind of common sense. They need to balance their budgets and pay off their debt, right? So rather than trying to crowd out the market, and so there's this problem, right, where the more the government borrows, the less the private sector can borrow, right? It's not like it's a infinite well of savings and capital that is available. And so if the government is borrowing lots of money for consumption, essentially, right, where they're not really borrowing to make good investments, that destroys value. And so I think that there's kind of a policy question there as well, that if governments then say, hey, we don't like Bitcoin treasury companies because they are better investments than bonds, government bonds, that's not a Bitcoin treasury company problem, right? That's a government problem. And I'd be happy to advise them and work with them on solving that problem. But ultimately, they can't go around always scapegoating and blaming other people for their problems.
I couldn't agree more. Maybe just coming back to the Bitcoin treasury bear market that we mentioned before, we've seen a lot of Bitcoin treasury companies doing pipe deals and reverse mergers. And we've seen that at the unlock, a lot of investors dumped their shares at that time, right? What are your thoughts on this trade-off? Because we see that those investors don't have the same long-term view as the management or some of the other investors have, and they just use it maybe for a more speculative purpose. So what do you think about it, and how do you see the evolution of these deals?
Yeah, so that's a really good question. So I think that the problem is that the public market does not have a lot of experience with pipes, and the challenge there is that in an ideal world, if you were capitalizing a Bitcoin treasury company, you would be able to, for example, do a reverse merger and issue lots of shares onto the public market, and then everybody buys the shares and you buy the Bitcoin, and then you've scaled up the company's collateral base. There are technical and regulatory limits to your ability to issue 500% of the shares, right? And on one hand, you could argue that that's a good thing, that there's a public policy reason for why exchanges and regulators don't want a company to just go out and issue lots of shares. That you want to have a bit of a process around that. But I do think that it creates kind of timing issues for the companies and for the investors, where the pipe is kind of a way around the fact that you can't do right, the private investment in public equity. Ideally, you would have public investment in public equity, right? The reason you have to do the pipe is really, from my understanding, it's from regulatory constraints. It's not because that the companies see it as like the best form of financing. in a vacuum, right? From first principles. So so then when you look at, okay, well, what is the purpose of raising equity capital in any form, right? Whether it's through the common stock ATM or through a pipe, it is to acquire a sufficiently large capital base to be able to then lever up and amplify the returns. Because if you have a very small capital base, you don't actually get very good credit terms, right? And so there's economies of scale in your ability to get good credit terms, whether it's in the form of a perpetual preferred or a convertible note or any other kind of form of leverage. And I would argue, when people say, oh, should I buy Bitcoin or should I buy a Bitcoin Treasury company stock? It's like, well, you need to think about what you're optimizing for. If you're optimizing for self-sovereignty, then obviously you should buy Bitcoin, right? That's the most self-sovereign asset in the world. If you're optimizing for, just buy and hold and you don't want to think about it, you should also still buy Bitcoin. Because ultimately, if you're investing in a Bitcoin treasury company, you need to keep up with the quarterly 10Qs, the 10Ks, the press releases. You need to pay attention to what they're doing, right? In order to be, I think, a prudent, reasonable investor. You need to keep tabs on your investment. And, Bitcoin doesn't really change. And so if you don't want to keep an eye on your investment, you just put your Bitcoin in cold storage, that solves that problem. If you are interested in public equities and you want to try to have some opportunity to outperform Bitcoin, then that's where you need to look at Bitcoin treasury companies, because you'll never outperform Bitcoin by holding Bitcoin. That I hope that should be obvious. But you can certainly underperform Bitcoin by not holding Bitcoin, right? And so you can't just go out and buy any kind of stock. You need to buy a stock that at least has a goal of being leveraged long Bitcoin. Then it's all about the execution and the entry point risk. So as I was talking about earlier, you can overpay for a good investment. It's very hard to underpay for a good investment, right? That's just value investing, right? So if you have Bitcoin and you lever up against it on your personal balance sheet, you kind of get bad terms, right? So it's either like a very short-term loan for 1 year, and there's a liquidation trigger. If Bitcoin crashes, you're forced to sell your Bitcoin, and you pay a high interest rate on top of that, which to me is very dubious. Of like, hey, the lender is not taking any risk and they're getting paid a high interest rate. That's weird. And so when we come together and pool our capital together in the form of a Bitcoin treasury company in order to access better credit terms than any of us could individually get, that's where the sum is greater than the parts, right? And so that's actually, I would argue, the fundamental value of a Bitcoin treasury company is just that, is that you're actually able to team up with other people to access the credit markets on better terms. And then, in an ideal world, the pipe and the reverse merger and all of this activity would happen in 1 day. It would all close in 1 day. All the shares would unlock in 1 day. And there would be, if you look at the stock price chart, it would just, there'd be no effect, right? Because assuming you end up with a 1x MNAV, let's say, right? If you end up at a 2x MNAV, then obviously the effect is that the stock price would double. But there's technical and regulatory reasons why that doesn't happen in 1 day, and it happens in several months. And so as an investor, you need to be very well informed about what the different processes are for capital raising and what the impact is on share count and obviously on, what your valuation model is.
We have one last question before we wrap up, and it's around the Bitcoin treasury companies today that trade below NAV. We've talked about now Strategy is probably one of the only ones still trading at an MNAV above 1. We have many that are below, and it's reflexive to the upside, right? If the MNAV is 5, you can issue a lot more shares, buy more Bitcoin, and it's easy in that environment. But what do you see now for those companies that are below NAV to get back above it? Is there anything they can actively do, or is it just sentiment driven at this point?
Yeah, great question. I think first and foremost, the management and the board have to be focused on long-term value creation, not managing the short-term stock price. First of all, it's illegal to do that, and second of all, I think it can be very value destructive to do that. I think ultimately the stock price and the MNAV, they will go to where the long-term fundamentals are in the long term, right? And so then it's like, okay, well, indeed, can management companies today create long-term value? And I think it really comes down to leveraging up, right? And so, and doing it in a way that's responsible and accretive to the common stock. And so that, if you look, there's a chart, a table that Saylor put in one of his presentations that kind of compares the leverage ratio and the MNAV kind of in a vacuum, right? Of take out all the sentiment, just do kind of a spreadsheet analysis. The higher the leverage ratio is, the higher the MNAV ought to be, right? If, in this model. And so if a company increases its leverage ratio, all else equal, in the long term, I would expect its MNAV to expand. I don't think that necessarily means they should immediately issue stock to monetize that. I think that they've got to kind of look at, is the MNAV in excess of what it ought to be, given the leverage ratio and expected future leverage, or is it a fair value, or is the MNAV kind of, under below what the models indicate it ought to be at? And that management really, it's kind of in the same position as an investor, right? And do you sell the stock or do you hold it? And so management has to make a decision. And I think that ultimately it's about how much demand is there for being leveraged long Bitcoin. And so if demand is greater than supply, then all the Bitcoin treasury companies kind of have a duty to go out and increase the supply of the common stock for people who want to go leverage long Bitcoin, because that will manifest itself in a higher than equilibrium MNAV. And, on the other flip side, on buybacks, I think there's a really interesting debate there, because, if a treasury company is trading at less than 1x MNAV, should they do a buyback? Well, if the goal is economies of scale to leverage up, then I don't think they should do a buyback. What I think they should do is not a buyback because they've got a less than 1x MNAV. They should only do a buyback, I think, this is just my personal view, if they already have more than enough collateral to access the best credit terms, right? And the buyback would increase their leverage ratio, right? In which case, that would actually improve their MNAV in two ways. One is that they're reducing the supply of shares on the market, and also from a kind of a modeling perspective, their MNAV should increase because the leverage ratio has increased. And so, I could see an argument for that. I think the biggest problem for a buyback is like, where's the money coming from, right? Where's the cash coming from? Because if the cash is coming from selling Bitcoin, I don't know. I don't think that's strategically, very, very good, because then before you know it, you're going to be buying more Bitcoin, right? And so you're kind of just incurring transaction costs of the friction of buying and selling Bitcoin for, a move that might not really be all that accretive for the common stock. And so you kind of want to reserve the buybacks to extreme situations, I would argue. Just my personal view. And we'll see, how many companies end up doing that or not. But I think that the business model for the foreseeable future, right, is going to be about issuance. It's not going to be about buybacks. When we think about the massive opportunity that there is, given, Bitcoin today is a $2 trillion collateral base, right? It has very little leverage. We recently saw an announcement from JPMorgan that they're going to be lending against Bitcoin as collateral. And so I just think that the opportunity here is massive, right? And so I'll just leave it at that.
Yeah. And Saylor tweeted about that today. Don't wait until your banker tells you have to buy Bitcoin.
Yeah, exactly. And I replied, tell your banker about Bitcoin with a photo of me and Jamie Dimon. I got a selfie with him when I was actually in DC, in Washington, DC at the Senate. I was lobbying for Bitcoin mining. He was lobbying for, I don't know, a bailout or something. I don't know what he was lobbying for, but we took a fun selfie together. And then he asked me what I was doing. I told him Bitcoin mining. He didn't want to engage on that. So I didn't get the opportunity to orange pill him at that time. But clearly, he's more open to Bitcoin than he was in the past.
Thank you, Pierre. As we're wrapping up, where can people find you and your work?
Yeah, at Bitcoin Pierre on X.
Great. No, so thank you so much. You've been very generous with your time. So thank you again.
Yeah, thank you. Thanks for having me on.
How many chairs are you sitting on right now?